These buildings have featured in TV programs across the world. They form an eye-catching background for the reform and opening up in China. Once again, a more dynamic free trade zone with better trade facilitation and investment attraction measures have come under the global spotlight. This is China's Shanghai Pilot Free Trade Zone. Shanghai Free Trade Zone was launched in September 2013 and expanded in April 2015. It grew from 4 customs areas of 28.78 square kilometers to 120.72 square kilometers, covering Lujiazui Financial Subzone, Zhangjiang High-Tech Subzone, and Jinqiao Development Subzone. With a special focus on investment, trade, finance, government regulation, and government function, a slew of fundamental and core institutional innovation were born. Shanghai Free Trade Zone was the first place in China to grant pre-established national treatment and issued negative list.
After 4 rounds of update, items on the list was reduced from 190 to 45. Almost 90% of sectors are opened up to foreign investment. More than 95% of the 11,000 new foreign companies are established through the new record filing system,
cutting the time required from 8 business days to only 1. It took 20 years to attract as many foreign companies. Outbound investment is regulated by filing a record at the competent department, which takes only 3 business days instead of a score of days, making local companies more competitive in international markets. Customs, inspection, and quarantine, and the maritime authorities have adopted nearly 100 innovative trade measures. Import and export movement were 78.5% and 31.7% faster than national average, with a 10% cut in cost on average. In Shanghai Free Trade Zone, it takes only 6 hours for imported fruits to be released after the ship has docked at the Yangshan port. In the latest 3.0 version of Single Window for International Trade,
more than 20 government departments and 10 functions are integrated,
so that 100% of international ship declaration and 95% of import and export declaration are submitted through the system, and the required data input was reduced by 65% and 24% respectively.
The Free Trade Zone allows the mixed container consolidation and distribution of domestic and bonded goods, which are stored and supervised in the same warehouse. It is estimated that participating companies have seen their storage cost more than halved, and trade volume increased by 40%. Goods bound for both domestic and international markets are handled more efficiently. Financial authorities have offered a 51-point and 40-point reform guidelines, set up a free trade account system, and developed the regulatory framework for key tasks such as capital account convertibility, market-based interest rate, opening financial markets, and RMB internationalization. The idea of FTA is gaining traction.
Nearly 30,000 companies from 130 countries and regions have set up 136,000 FTAs.
A macro-prudential regulatory framework over cross-border capital flows
has helped companies to raise an equivalent to 14,100 billion yuan through FTAs.
A boom to the real economy. The Free Trade Zone struck a balance between retaining deposits and preventing rate hikes by defining procedures for nationwide reform of market-based interest rates and taking the lead in lifting the cap on deposit rate. Among its international platforms for trading financial assets are an international board of Shanghai Gold Exchange, a yuan-dominated Shanghai Gold Fix, Shanghai International Energy Exchange, and Shanghai Insurance Exchange. The framework for financial regulation and risk prevention was developed. Regulatory emphasis was shifted to post-entry supervision. The regulation system features business self-discipline, industry self-regulation, public oversight, and government supervision. More than 10 million entries of credit information of companies and individuals are available at the Public Credit Information Service platform. Annual reports of companies are reviewed for red flags. Private sector players, such as trade associations, are also playing a role. Shanghai Free Trade Zone Administration and Pudong New Area Government were rolled into one in April 2015 to reinvent government functions and improve public service in the entire district. An integrated approach to law enforcement was adopted in 4 major areas. More than 80% of law enforcement personnel are deployed to the front line. Business license and administrative permit are fully decoupled, making business registration much easier. Market dynamism and growth potential are unleashed.
Over the past 5 years, Shanghai Free Trade Zone has 59,000 newly established companies,
exceeding the 20-year total prior to its launch. It contributed 3/4 of Pudong's GDP with 1/10 of Pudong's land area. More than 100 of its successful pioneering practices were replicated nationwide. In March 2017, the State Council issued plans for comprehensively furthering reform and opening up of China Shanghai Pilot Free Trade Zone, which encourages Shanghai Free Trade Zone to seek constant improvement in serving as a test ground for further reform and innovation. A stress-testing open economy and a leading area with enhanced public governance.
It supports the Belt and Road Initiative by becoming a bridgehead that helps Chinese companies to go global.
Its role is enforced through the replication and scaling up of its success across China.